So good to have you join us today on this edition of Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. We have a lot lined up for you today, so let's get started with a glimpse of the day's highlights. Online search giant Naver is dipping its foot into the mobile navigation business with plans to personalize the service. How did Korean companies do this year in the midst of falling sales and major reshuffling efforts? We sit down with an expert to talk about Korea's corporate performance and changes in its landscape seen in 2015. We're heading into a new year, and there's much anticipation among investors on how the country's housing market will pan out. We take a look at the changes that might take place and potential concerns regarding Korea's real estate front for 2016. Our Lee Ju-young starts us off.
In 2015, the real estate market in Korea was very active, to say the least, with record-high home transactions and roughly 510,000 new homes up for pre-sale. But it has created just as big of a problem as household debt levels now hover around the $1 trillion mark and have become a serious liability to the country's long-term economic well-being. According to property information provider Real Estate.194, the market in 2016 will likely cool down.
The real estate market is expected to slow down next year, largely due to seasonal factors in the first quarter, concerns of an interest rate hike, and the stricter screening of applicants for loans. The room for price growth and transactions of homes will also start to taper.
Korea Housing Institute said the third quarter of next year will be a turning point for the market, as policies associated with the housing market are set to change, like the loan-to-value and debt-to-income ratios, requiring people to have more assets to secure a mortgage. Market watchers also add that the construction of roughly 700,000 apartments that have been approved this year may result in an oversupply of housing units that can potentially drive the real estate market into negative growth in 2017 when construction is finished. The concern is that if the volume of available houses surge at one time, prices may fall due to comparatively low demand. Such an imbalance of supply and demand could then spill over into the financial market if investors who borrowed money for new apartments fail to find tenants. Lee Ju-young, Business Daily.
To get around town, many drivers here in Korea use a GPS navigation application on their smartphones. It's a sector long dominated by local mobile carriers, and recently online search giant Naver threw its hat into the ring. What's the reason for the move, and what changes could come out of it? Our Eunice Kim takes us on a spin.
It's a low-key button that appears on top of Naver Maps' route search result page. But a click leads to the top web portal's new venture into mobile navigation, and it's already making waves. The mobile navigation sector has long been driven by local telecom companies. SK Planet's T-Map currently boasts the most monthly active users at 7.6 million, followed by KT's Ole Navi and LG U+'s U+ Navi. Messaging giant Kakao this year joined the fray when it acquired the startup creator of Kimgisa, a popular navigation app. And with Naver's recent entry, many believe this landscape could be reshuffled. This is because Naver Maps' monthly active users near 10 million, and by building the navigation feature into the map service, users already have the utility at their fingertips. Naver says it plans to move beyond a simple direction guide by personalizing the service based on users' online search history.
We plan on boosting the app's value beyond Naver search results, connecting it to things like shopping, payments, and reservations.
It's another way the search engine is adopting online to offline, or O2O commerce, directing business to real-world entities from online origins.
By strengthening its location-based service in the O2O context, it looks like they're building a platform that can influence all aspects of the user's daily life.
As global car companies and tech giants alike are throwing themselves into the driverless car race, Korea's telecom and tech companies are exploring synergistic possibilities via sophisticated navigation technology and beyond. Eunice Kim, Business Daily.
On this last day of 2015, we bring you the third and final installment of our series on the Korean economy in review. Today, we focus on the drivers of economic growth, the businesses and corporations themselves. What kind of challenges were they up against, and how did they perform? Take a look.
It was a year to forget for many Korean companies. The triple threat that dragged down the growth corporations were hoping for: consistently dropping exports, a strengthening Korean currency, and plummeting crude oil prices. Companies in Asia's fourth largest economy found themselves sandwiched between Japan's depreciating yen, which shed a third of its value since 2012, and China's slowing growth, as well as its rising tech competitiveness. Domestically, weaknesses of conglomerate governance came to light. Case in point, Lotte Group's messy succession debacle played out in the public eye. As 2015 was a record year for M&As on the global arena, so it was in Korea. 427 transactions worth $65 billion were logged as companies sharpened their focus in an effort to upgrade their strengths. Top player Samsung Group made major shifts, selling off its chemical unit to Lotte Group and merging construction arm CNT with Jail Industries, as de facto heir Lee Jae-yong took on a more public role. It was also a big year for conglomerates zoning in on the lucrative billion-dollar duty-free industry. By year's end, Lotte lost one of its prime in-city licenses to newcomer Tusan. And as exports are poised to record a 12th consecutive month of declines in December, Korea's businesses are looking inwards for new growth engines, like fintech, to keep wheels oiled and turning. Eyes are also shifting to the growing startup colony, quietly making gains in performance and profitability. Last year, startups collectively pulled in sales of $184 billion, or 14.5% of that year's GDP, only beat by Samsung Group.
And to tell us more about this, Kim Il-sun, director of the Society for National Infrastructure at Hanyang University, joins us in the studio today. So good to see you.
Well, pleasure.
All right, so it was no doubt a tough year for businesses here in Korea, especially for the shipbuilding sector, with falling global oil prices, growing threats from Chinese competitors, and also a steep decline in orders. So these factors are unfortunately expected to continue and bleed into the new year.
That's right.
So how can this sector, how can Korean shipbuilders prepare for what's to come in the new year?
Well, they are hoping for the silver lining sometime sooner than later, and they are cutting every corner of their operations. For example, that they're reducing the labor, and they're selling out their assets that are not in specific use for their own operations. And they're going through the toughest period of restructuring these days. For example, Daewoo Shipbuilding and Samsung Heavy Industries, they are reducing about 30% of the executives. They're letting them go to reduce their labor forces. And Hyundai, for example, their CEOs and executives are cutting down on their own salaries, 50 to as much as 100% until they regain the profit. So the industry is expecting about $70 billion in revenue in 2016, with about $700 million in operating loss. And to turn around to become more profitable, they expect to have this 2017 year to come, while the 2016 revenues and profits actually realized in 2017.
All right, then I think we could say that at the center of this problem this year stands poor corporate performance by many, especially conglomerates, in terms of sales. So this year we saw significant struggles from conglomerates as their sales fell by the biggest margin or sharpest rate in nearly or over a decade.
That's
right?
True. That's
and
true.
Their structural problems also came into light. So can you tell us more about those?
Like Lotte. Well, let's look at the fundamental philosophy behind the Korean-style management. Not seen in other countries widely, the biggest thrust behind Korean major corporation is that it has a harmony of ownership and management, which what it means is that it has a centralized decision-making and a decentralized execution of their operations. In case of Lotte Group, what they have is the succession planning is not in order. So as long as the succession is placed without a dispute like other corporations, the recent fiasco that Lotte is going through would not happen in other corporations. So it's an isolated situation with Lotte, for example. But overall, the decline in the performance for other Korean mega corporations is a prevailing situation. So it's a concern that somebody needs to step in and try to fix the problem.
All right, I think for next year, the key focus in the corporate landscape would be downsizing and restructuring and mergers and acquisitions.
Right.
This year, we actually saw an increasing number of conglomerates and other corporations voluntarily downsizing restructuring their companies in order to focus on their core businesses.
Sure. Korean chaebols learned a big lesson from the 1997 financial crisis that even the mega corporations can go belly up. So what they do they are taking the preemptive measures to fix the problems before it gets too late, voluntarily, like you said. For example, Samsung and Lotte, they struck a big deal to sell out the Samsung's chemical subsidiaries to Lotte, and Lotte wanted to take those companies to aggressively expand the market places they have. And Samsung is focusing more on the electronic divisions of their operations. The next generation young CEOs of Korean chaebols are focusing more of the what's good for them over the superficial pride that their parents might have had. So their self-led, self-restructuring is proliferating to other Korean major corporations, it seems like.
Let's talk about zombie companies now.
Zombie companies.
These companies have been plaguing Korea's corporate landscape for a while, and the government has been actively tackling this problem. Now, we want to know what kind of efforts are underway and what kind of changes can we expect in this area next year?
Well, let's look at what zombie company means, first of all. It's a company that needs constant bailouts in order to even survive and operate. It's like a patient needing a life support in a hospital.
Oh, geez.
Well, financially speaking, more professionally, the company's interest rates are greater than operating profit. We call them zombie companies. They cannot sustain the operation independently. Well, what problem it creates is that once they continue to operate, the banks need to inject capitals to have them survive, and that will take away the capitals, otherwise would go into a healthier growing corporations. And we've seen more zombie companies comparing from 2009 to 2015, up from 9.3% to 14.8%. Wow. Is a growing concern.
Now, talking about government efforts, let's talk about this one-shot business revitalization bill, which was proposed by the government this year. Can you tell us more about this and how it's expected to help businesses in the new year?
Well, what they call one-shot law is like a one-stop special deregulation of the law to aid corporations to exercise more of the mergers and acquisitions without too much regulation on top of them, such as commercial laws and taxation laws and fair trade laws will be eased out so the mega corporations can manage their restructuring processes without concerning the legal restrictions on them. Once the law is passed, we expect to see a larger amount of the mergers and acquisitions in 2016, and it'll proliferate and change the scenario of the Korean economy, we believe.
Now, a recent report by the Korea Development Bank actually said that a lot of industries, including especially the manufacturing sector, are expected to continue to face an economic downturn in the new year. So I think it's time for us to find new growth engines. Are there any areas that you see potential success in the new year?
Sure, a few, but I believe Korea should not underestimate its strength because Korea became world's top 10 economies in less than half a century. From nothing, from a Wall Street nation. What Korea has proven so far is its ability to build the nation from literally nothing. Its national structure building know-how is very, very advanced. So if we can export those know-hows to developing countries, there are many countries out there in Africa or in Asia with welcome arms to give them multi-billion-dollar projects. And for the fintech, obviously, it's the next big thing. It'll probably change the scenery of the banking industry for good. And we need to also pay attention to blockchain because it'll be a bigger impact on the society and the way the business is run compared to what the internet has done in the past 20 years. Obviously, semiconductors and the biotech and the electronics will continue to be a strong and hot market. But one needs to what we need to focus on is what we call a needs-based management focus that will create paradigm of the profit-generating business models. Simply speaking, we need to pay attention to what the consumers are demanding from the companies, not the other way around.
All right, let's hope to see more growth in those potential areas, and also hopefully we'll hear more good news in the business and corporate sector.
We hope so. Yes.
All right, thank you so much for coming in today.
You're welcome.
And that wraps it up for today and this year. Thanks so much for watching, and we hope to see you right back here at the same time, same place from Monday through Friday at 4 p.m. Korea time next year. We wish every one of our viewers a very happy new year.